Hello, everybody. This is Alan at Alan Talks FinTech. Today, I want to take you through my stock portfolio and give you some idea of what I was thinking, what my goals are, and then kind of how I'm doing. So, let's get started. So, I'm logged into my Fidelity account. I'm looking at the portfolio view of one of my accounts that has most of my stocks in it, and we'll just kind of page through it and run through it real quick, give you some idea of what I was trying to achieve, what kind of stocks do I have. Now, one thing you'll notice right away is I tend to try to buy 100 shares or 200 shares or 50 shares. So I try to buy in groups of 50 or 100. I don't buy like typically one or two shares or 10 shares. I try to get enough money to buy like 100. So, first one on the list, Apple. So, my cost share is about $165. Have a little over 200 shares. So, when I'm over like that, that's the dividend reinvestment. So, at one point I had 200, and I probably reinvested twice to get to 206. AbbVie's one I bought in January. Notice I paid about 87.10 for that. I'm down a little bit, about $155. And honestly, that amount of being down, I don't even think about it. So you'll see some of these other stocks, I'm down a lot more. So $155 is actually nothing. Next one, Arbor Realty Trust. Now, I bought this one in not too long ago, probably about a month or so ago. I was researching stock on Fidelity's website, and this one kept coming up over and over again as growing fairly rapidly. So I bought 200 shares, paid about $12.95 per share, and I haven't got any dividends out of it yet, but they'll be coming up shortly, and it's up 4.88%. And like I said, I probably had it a month, maybe 6 weeks. Applied Materials. So this is the one I made the biggest mistake on. I was watching Jim Cramer's Mad Money one night. They had the CEO of the company on there. Applied Materials is a chip making kind of company in the semiconductors business. They were talking about how they were growing, and when I bought in at like $50 a share, bought it over time. I didn't all buy it at one price. Were going up. They got up to about $60. And then somewhere around midsummer, they all started going back down. And that was due to the China trade wars with Trump. So basically, all that trade war stuff killed this stock. So it's down. Now, you may think, oh, I'm down $11,000, down 17%. That's really bad. But at one point, I was down 30 or 40%. And, I debated what to do. I decided, well, I'm going to ride this one out. It's going to come back at some point. So it's actually come back a lot. When I get up to around 50, I'll probably end up selling it. British Petroleum. Now, this one I've been buying over the years at various prices. Earlier this year, it dipped below $40. So, and I've been watching it a long time. I bought some in the past around $44, and then after I bought it at 44, it went down into the around 40. So when I saw it earlier this year down below 40, I bought some more. So you can see that one's done pretty good. The oil stocks have been doing well. Next one, Broadridge Financial. They're a company that does proxy statements, electronic delivery of equity and financial statements, proxy votes, things like that. I bought this one because I thought fintech, financial technology, would be a hot thing. And it did go up to, I think, almost 130 at one point, and then it dropped back down. And it recently, it was down in the high 90s, around 100 there for a while. It's been making kind of a comeback lately. This one, I bought 100 shares originally, and you notice I got at least, I think, 2 dividend reinvestments on it. I think it only pays around 2% dividend. So when it gets up around 115, that one's going to get sold. Enbridge. Enbridge is a Canadian company. involved with energy, gas, natural gas, stuff like that. Earlier this year, they were down quite a bit. You noticed I bought it at $31. Now it's 37. Still probably a good buy. They pay good dividends. I think it's around 6% or something like that. Facebook. I have Facebook and other accounts. Some of them I bought at 140. This one particular lot of 50 shares I bought at 175. I bought it when it was going down, got down around the 170s. I'm like, oh, that's a good buy. But so I bought it then, and notice it's almost back to even. It's been down lower, so this one's kind of come back. Not sure what to do with this one. I've been thinking about selling it if it goes up, around 200. But we'll see. See what their next earnings statement's like. General Mills. I bought this one probably back in January. And notice it's up about 30%. Now, I had only bought 50 shares. Should have bought a lot more. Hercules Capital. I bought this one mainly because it's a high dividend stock. It's gone down recently because one of the CEOs was in trouble with this bribing college officials to get kids into college. Somehow he's involved in that. But anyways, it's a high-paying dividend stock. When I read about it, it's actually a good company. People say good things about it, so maybe it's a little undervalued right now. Kraft Heinz, another bad luck story. Bought this just before they announced their earnings, and so now I'm down 30%. But I think I'm gonna hang on this for a while. When you have a large portfolio, $1,000 really isn't that much. It looks bad, it's down 30%, but being down $1,400, if you have a big portfolio, $1,400 is nothing. So I'm gonna hang on to that one. Coca-Cola, bought this one recently, probably back in January. Hasn't really done much, but pays fairly good dividend, so probably hang on to that for a while. Plus, Warren Buffett owns that one. Main Street Capital. This one's really bounced around a lot. Again, another high dividend paying stock. Probably hang on to this one for a while. McDonald's. Noticed I paid about $165 for it. Only bought 50 shares. Right after I bought it, shot up quite a bit. Don't quite understand why McDonald's is doing so well. Next one, MITT. So investment trust. $17. I'm down a little bit, down $20. Another kind of dividend paying stock. Notice I haven't got any dividends yet. I'm still at my 100 shares that I originally paid for it. Altria, MO. So this one I'm kind of torn on. I'm not a smoker. Don't believe in smoking. Don't encourage smoking. Yet I bought the stock and done fairly well with it, 16%. A lot of negative news around Juul, their e-cigarettes. They're getting into the kind of the cannabis trade a little bit. I don't know what to think about this one, but they pay good dividends. They're growing, even with all the negative comments. The number of smokers is declining over time and stuff like that. So I'm not sure what to do about that. Microsoft. This one I have in some of my other accounts. Some Microsoft shares I bought at a much lower price. And, done good with Microsoft. They're into cloud. They've kind of made a comeback in the IT space. I mean, they've always done good, but they kind of stalled for a while. And they're a big player. They're competing with Amazon for cloud computing, doing really well. Seems like Microsoft technology is now back in favor. Sometimes companies hate them. Sometimes companies love them. And with their Office 365 products, SharePoint, business intelligence tools, things like that, they're kind of back in favor. Helps with their Azure. Azure's doing fairly well. Not as good as Amazon, but they're pretty good in the cloud computing. All right, OKTA. This is one I was trying to look for some sort of stock that I think was going to gain a lot. I felt like I missed out on quite a few fairly aggressively growing stocks like MongoDB, Atlassian, that I was watching, but I didn't really get in and stay with them. So I thought, okay, I need to redeem myself. This is one I thought, well, this one will probably keep going up. You know, if you follow the trends of some of these cloud based technology stocks, this will be one of them. So I'm going to kind of hang on to this one for a while. Prospect Capital. So this one, back in January, they're about $5.80. I always put limit orders in when I buy stock. I'm like, well, I want 575. I'll pay 575 for it. And the problem was Prospect Capital never really went down. It just kind of slowly kept creeping up. So the next day I'd put another limit order up in. I'd probably increase the strike price by 10 cents, and it would never go down to my limit. And so it kept going up, kept going up. So eventually I ended up buying it around $6.27. Originally bought 650 shares, which is easy to do because, you know, it's $6 a share. And it's been going up. It's been in the anywhere from 630 to 660 lately. I would say if it got down to 630, it's probably a good price to buy it at. Now this one, Quidel, I bought another one. I thought, well, I was researching it on Fidelity, seemed to be having some growth. And then I bought 100 shares at $69. It's fallen to $63. This one, not really totally in love with. If it gets back up to $70, I'll probably end up selling it. Next one, Royal Dutch Shell, A class. So this one I probably made a little bit of a mistake on. There's two Royal Dutch Shells. There's A and B. Well, I found out later after buying 150 shares of A is that the earnings you get off the dividends are taxed. So recently they paid out a dividend, and little did I know, Fidelity took out a little chunk of money to pay the foreign tax. I think it goes to the UK or Netherlands or somewhere. So the stock to buy is RDSB, not RDSA if you're living in the United States. Can't really sell this one though because it keeps going up. Notice I paid $57 for it, and this was back in January. You know, gotta hang on to it. Keeps going up, pays really good dividends. But what I'm gonna do is try to buy RDSB. Square, one of my best stocks. As you notice, my price here is $68. A couple years ago, I bought Square at $14. I probably had, I think, 300 or 400 shares of it at that time. And I think it went up to about $40, somewhere in that range. And I ended up selling a lot of it. Then I bought some more later, went up a little bit, sold it, went down, bought a little bit more, went up, sold it. So this one, I think it's been up over $100 and likely to go back up. It's being run by Jack Dorsey, CEO of Twitter, and so it's done fairly well. I really like Square. Will it go over $100? Might. Will it go to $150? I'd be surprised. But I wish I'd bought more at $14 and hung on to it. Another story, did that similar thing with Roku when it IPO'd. Bought that one at $18. You know, it's been as high up as $70. Should have hung on to that one, but I ended up selling it because the price was bouncing around a lot the first couple months. Stone is a Brazilian payment processing company. And notice I bought it at $35. Recently, it jumped up to like $45 and was doing really well. And then it's come back down. What happened was they issued more shares. So it was doing really good. And then they come out and said, whoa, we're going to sell some more shares. And the price promptly went down. But I think this one will continue to go back up. Warren Buffett owns it. You can look at his position. Does pretty well. So for me, this is one of the growth stocks. I'm going to be like Square and Roku on this one. Try to hang on to it unless it really shows signs of dying. And by the way, I found that one on Fidelity's research website. I was looking for growth stocks, and this one kept coming up a lot. Same way with this next one. However, the opposite's kind of happened. So I bought the SolarWinds. It's kind of a systems management company I think it's out of Canada. So notice I paid $18.62. This one has been up in the low 20s. Lately it's come back down. Probably hang on to this one for a while. I'm hoping, it'll be something like those other cloud-based management companies. We'll see how it does. But only down $50. 50 is nothing. So AT&T. I kind of went crazy on AT&T. Notice it got down into the high 20s around January. Bought a bunch of shares. Now it's $32. It doesn't really gain much in price, but it pays about 6.5 or a little bit higher percent dividend. So I'm just hanging on that for the dividend. Valero. Now Valero is one of those companies. If you research on it, it was growing a lot. I think it grew up to $120 a share. They are a gasoline refinery, gas station kind of company. It dipped back down in January down to about $80 a share. So I bought 50 shares. Should have bought more. And it's gone back up recently. It's still actually at a very good price right now. I should probably buy more. They pay a pretty good dividend. They recently raised their dividend. So you might want to check that one out. And then ExxonMobil. So ExxonMobil, I've been following this one for a long time. So I originally bought it years ago at $90 a share. And then when it hit like 100, I sold it. Then I bought some at 73. And then it kind of actually went down after I bought it. It was down in the 60s. I think at one point it was $66, $67, $68, somewhere in that range. And I remember reading online that if you bought, a large number of shares, you could get about $50,000 in dividends. That's if you had about $800,000 to buy. But they pay pretty good dividend. And if they get down into the low 70s again, or even the 60s, I'd buy it without hesitation. I wish I'd bought more down in the 60s. They're also kind of like, the oil companies, BP, Royal Dutch Shell, Valero, Exxon Mobil, Chevron. They're all good companies. No matter what people say, people still buy a lot of oil. And the energy industry is fairly strong, and they pay good dividends. My current value is $290 of all these shares. It's not actually $290. There's about $20,000 at the top sitting in cash that I'm just kind of waiting to buy stocks with. Hopefully this kind of helped you. And if you liked my video, please subscribe. Click the like button. Post some comments. I'll answer your comments, give you my thoughts. We'll talk to you later.